Good morning, everyone, and welcome to our third edition of the Summit Series. I'm Pamela Steer, Chief Financial and Corporate Strategy Officer at Payments Canada, and I'll be your host for today. I wanted to start off by thanking our audience, you. We've seen tremendous engagement with this series, which tells us that the need to deliver engaging payments content is still very strong, even as this global pandemic continues on. While we don't have the fortune to be able to meet in person, we will absolutely keep the ecosystem engaged with compelling content. We have a lot to discuss today, but we will save time at the end, as always, for your questions. So please send your questions through the Q&A box on your screen, and we'll try to answer as many as time permits. Today, we're talking about the dark side of payments and how risk and regulation are fighting the good fight to keep our systems safe and secure. A stark reminder came to light yesterday as our CRA had to suspend its online services temporarily after hackers attempted to compromise Canadians' personal information in the Government of Canada service sites. This is of particular sensitivity as the shutdown impacted the government benefit programs during the pandemic. With that as an introduction, let's start off with introductions of our panel today. Welcome everyone, and Andrew, let's start with you, please.
Great. Hi, my name is Andrew Bigart. I'm an attorney at Venable, a Washington, D.C. based law firm. And I'm here today to help provide some perspective from the United States, what we see in terms of the payments industry, fraud, and the like. And so I'm very excited to be here. Thank you very much to Payments Canada for having this. And just to give you a little quick background on Venable, we're a US-based law firm with offices New York, Washington, D.C., Los Angeles, San Francisco, and we do a lot of work in the payments industry, representing both financial institutions like banks, as well as payment processors and various other payments companies. So I'm very excited to be here and look forward to having a great discussion.
Great, thank you, Andrew. And Marie, let's turn it over to you.
Good morning, everybody. Bonjour. Ça me fait plaisir d'être ici aujourd'hui, de joindre à vous. Great panelists. My name is Marie Houde. I'm a senior director for business risk and enterprise payments team at RBC. I'll be representing the financial institution perspective on this exciting topic. Personally, I've been my chores or my daily tasks involve leading insights and the whole management, the strategic deployment of how we manage payments risk at RBC, especially on the Canadian Payments Modernization Program. I also oversee the industry affairs team and the relationships that we deal, including Payments Canada and SWIFT. With that, I've been with RBC since 2001. Before joining the enterprise payments team, I was a global chief privacy officer in the compliance team. Also joined the compliance team on various aspects, supporting Canadian banking operations. And so I'm delighted to be here today and join this great panel. Thank you, Pamela.
Oh, thanks so much, Marie, and we're glad you could join us. And finally, our own Peter Dodic from Payments Canada. Peter.
Thanks, Pamela. Good morning. My name is Peter. I am the Chief Risk Officer at Payments Canada. Payments Canada, of course, is a private non-for-profit corporation that operates and maintains Canada's national systems for clearing and settlement of payments. And by way of background, I've been with PayCan for 2 years now, where I lead the risk, compliance, and audit functions. And before my time here, I spent 15 years at a large Canadian FI where I worked in finance, corporate development, and operational risk. And in a former life, I worked as an engineer in the resource sector. Thank you. Good to be here.
Great. Well, welcome again to all of our panelists. And let's start right in with our questions. So, current events. Likely a global pandemic was not high on everyone's risk list a year ago, yet here we all are. How has our current situation affected our risk outlook and our ability to respond to those in need during a crisis? Andrew, let's start with you.
Yeah, thank you. I think that is a great question because we really are in many ways in an unprecedented time. I think from the US perspective, at least, I think the payments industry has done a really good job of keeping everything moving, right? If you think back at least to a few months ago when the pandemic first hit in the United States, at least, we didn't know what to do in terms of how do you get groceries? What do you do if you need to order out for food? How do you make payments? And the industry really was able to maintain everything running really well. And it helped in a lot of ways because you've got small businesses. If you think about the local restaurants that were losing business, now you could use an app to order from them and get curbside pickup. So I think the industry did a great job of reacting and maintaining payments during this time. But I think the flip side of that, or the dark side, as we should be discussing during this panel, is that fraudsters have also been looking to take advantage of the uncertainty and the challenges that are presented by this. And at least from the US perspective, there's a couple of unique ways that this has come about. First, the US, like some other countries, launched a large economic stimulus to help support small businesses and make sure that employees are staying paid, which was basically a lending program. And there's been a lot of fraud in that that we're seeing. And so the US government, particularly the Department of Justice, is getting very aggressive in going after that. There's also been just a lot of generic COVID-related fraud, merchants selling masks, making representations about how effective they are when they're not, merchants selling vitamin pills and things like that, claiming that they can prevent COVID when that's not the case. And so the US government has been very aggressive in going after that kind of fraud as well. And then, all throughout this, as we've seen now for many years, there's been a lot of identity theft and synthetic identity fraud type activities, which I think we'll probably talk about later on in the presentation. So I think that while the industry has done a great job in reacting to this, there's been a lot of fraud that also needs to be addressed. And from the US perspective, the government is really taking notice of that and taking steps to start going after it. So that's kind of what we're seeing here in the US. I'd love to hear what you're seeing in Canada as well.
Well, thanks so much, Andrew. Over to you, Marie. What are you seeing from your financial institution perspective?
Well, from an FI perspective, there are many ways that we are dealing with these captures. Obviously, virtually all aspects of our operations were affected by the global pandemic. Mission critical, just like Andrew talked about, right, was first implement appropriate response really to protect and support our employees, our clients, our communities, and we need to strive to ensure continued consumer service to our clients because in this world, right, operational continuity was expected. People relied on our payment systems to keep moving the money in these unusual times. So what did we have to do, right? So first, tackle mission critical. We had to promote the safety of our employees and transition to work from home arrangement in a fairly large numbers. We had to support our clients. How did we do that, right? We did targeted outreach, supported the relief programs, provided our own as well from individual, small business, commercial, corporate, through payment deferrals, refinancing or restructurings, or even providing new loans. So we had to be there, respond to our clients. And also for our communities, we needed to be there and support all the efforts where focusing maybe a little bit more on food security, mental health, and frontline workers, which were facing a lot of stress and so on. But what came to light, Pamela, during this time is that, well, we already knew that, but sometimes it's really nice reminder that, risks are not static. Risk management is a very dynamic exercise, and everything is working through. So once you address the mission critical factor, we had to evolve quickly and always keep appraised of what are these emerging risks, what is happening. As Andrew mentioned, obviously, fraudsters are always looking for the weakest links, any change disruptions to try to exploit those weaknesses in the system. And I know Andrew just listed a few. From our perspective, we needed to stay on top of these challenges as well. And despite those measures, really the extended, looking forward, the forward-looking aspect is still very uncertain this time. I do want to call out, though, specifically, I think it was quite remarkable that, we are where we are in managing this as best as we can as a country, largely because we coordinated our collaboration in this. And I think it was across all stakeholders we had to come together, from regulators, government relief programs, private companies, citizens doing their parts as well. And so through all of that, we will get through. And we do believe that, despite these uncertain times, we have to stay on our toes and keep managing it. And at the end of the day, dynamic risk management is really simple. Identify the risk, assess it, mitigate it, monitor if it's working, and then report. And then if there are gaps, fix it, start over, right? So it's fairly simple. We're applying that, and it's served us well. Thank you, Pamela.
Thank you, Marie. That's fantastic. And you're absolutely right. It was quite heartening to me to see the level of collaboration among financial institutions that are such fierce competitors in the marketplace often, and how you're absolutely right. They came together as a group to assist government to get the benefits to the people, to make them safe and secure and fast. And so that was very impressive to me to see how everybody really worked together amidst all the other things and the other priorities and risks that they were dealing with. Now, Peter, over to you. From a financial market infrastructure and critical infrastructure, I mean, if Payments Canada goes down, kind of the economy stops by and large.
Yeah.
What are your points in terms of our ability to respond and how it has affected our risk outlook?
Yeah, sure, Pamela. So I think a couple of things here from the perspective of financial market infrastructure like Payments Canada. Strong crisis management and resiliency is really in our DNA. It's written in our mandate, and I would say it's expected by our member institutions and by our regulators and oversight bodies. So if I think a little bit about organizational resiliency, we update our crisis plans every year, and they're tested every year. In fact, we went through that exercise late last year. So when COVID hit, our plans and our communications were nicely updated and ready to go. I would say our leaders knew what to do and when to do it. So in fact, when we invoked our plan back on March 13th, on that Friday for COVID reasons, our organization was really able to transition pretty seamlessly to work from home over one weekend. I'd add that our security team also works on resiliency. I know there's been plenty of work over the years to harden our systems and to build resiliency in both our corporate and our payment systems. And kind of one last thought around resiliency. It's not just COVID specific, but our planning generally takes an all hazards approach, right? So we have plans in place not only for pandemics, but for all kinds of events that can hit us, be it a Hurricane Sandy or whatever. It's hard to predict what's coming exactly. So it's best to have more of a generic all hazards approach so you can adapt and react to what's happening in the moment. If I pivot to risk outlook for a second, I think a couple of thoughts here. One is, our enterprise risk management framework has an emerging risk program, right? So where we monitor emerging risks. We did see COVID in early 2020, as most of you did. So, we were aware to some degree of what could be coming. And I think if we knew if it could escalate, the work that we had done over the years to harden our systems and to, adapt to a work from home posture would serve us well and maybe address the situation as it happened. If I look at our top risk heat map for a sec, yes, impacts from COVID are top of mind. So we have risks like health impacts to staff, possible delays in initiatives or projects, but our key risk really remains unchanged, right? In a pre or post-COVID world, it's still cyber. Cyber is still our top risk. So, if I think in terms of identifying and mitigating risk, it's obviously too late to plan for a risk or to manage through it, after it happens, right? So this pandemic to me only reinforces kind of a couple of things that you need to build before events happen. So one is that resilient organization, and one is a strong risk culture. When I think of resilience at our organization, I mean having frameworks, having plans, having protocols in place to handle all hazards, both internally, which is important, but maybe for an FMI like us, maybe it's more importantly externally. And these tools should be frequently tested, so both the team, the firm, and industry knows who does what if something happens. And there's also, I think, a cultural aspect to resilience. That's where, staff can remain strong and able to bounce back from adversity a bit. And when I talk about risk culture, we're talking about having awareness, understanding, experience in managing risk across the organization. Folks at our organization know that my second line team is not here to manage risk for them, right? We build them frameworks and tools that empower them to manage their risks. So only when my colleagues know that role, which they do, and actively play it, which they do, can you handle something like a pandemic, right? So, Andrew mentioned things like cybercrime and fraud will happen in times like these. I think we have to remain vigilant while managing our people and our firms through the pandemic. Back to you, Pamela.
Thanks, Peter. That's fantastic, and thank you all for your remarks as you come from different aspects of the discussion. So let's build on those comments and go dark. So as this is the dark side of payments, we know that criminals are getting smarter and technology is getting faster. We just spoke about it. Each of you spoke about it in different ways, and we referenced the CRA issue of yesterday. So what fraudulent trends are emerging in each of your respective areas, and what risk mitigation do you have in place to prevent it, or if it happens, which is obviously not desirable, to lessen it to the extent possible? And Marie, we'll start with you on this one, please.
Thank you. Well, Pamela, I would say I echo what Peter said. In an environment where we have a heavy reliance on the internet to conduct our day-to-day business activities, and we have a lot of we rely on our technology. Obviously, cyber attacks, the data breaches that may come to it. You refer to the CRA, cyber extortion, similar compromise. FIs, normally because of their size, their scale, the global nature, it's attractive to cyber criminals, and it does bring a heightened risk. Obviously, we live in a complex operational environment because of that, so it brings a complex control environment to try to monitor. As an ecosystem, though, we have to be mindful that complexity is increasing. To your point, what are we doing about it? We control certain things. We control the third parties we deal with, but the reality is that from an end-to-end payment perspective, if you want to focus on that, our clients, our customers, or all of that, they're using their own device to initiate a payment. They're going through other means. So you're expanding, you're stretching really the environment where you have control to places where you don't have as much control. So it's very, very important that, what we were able to identify any out of context patterns or all these aspects. There are many things we have to monitor to deal with that. We've already identified from our previous discussions that the pandemic really has disrupted operational processes to a certain degree. Even though it was kind of seamless, the transition was seamless, there was some disruption, and then it fosters an environment that's more favorable, right, to target. So I know Andrew and Peter mentioned it, increased malicious activities. We talked about the CRA, but you think about COVID phishing emails, malware embedded in mobile apps for the purpose of tracking infection rates, right? Or events with commercial clients where they might be persuaded to change vendor payment information or so on. So the sources are right all over, and so it's critical that like back to my 5 things that we have to do, right? Identify, assess, and identify, assess, mitigate, monitor, and report. The oversight of those controls are key to make sure they keep being very useful. So, and that's really how we try to tackle. So I would, in a nutshell, I would say we're doing more of the same to ensure and protect our clients during those uncertain times.
Thanks, Marie. Peter, over to you as an FMI from our perspective at Payments Canada, as I say but your perspective, what do you see and what are you seeing?
Thanks, Pamela. So this is a bit of a scary theme, right? So if you think about financial market infrastructure, bad actors, I'm sure, are always interested in getting access to systems like ours, right? I know we've seen phishing activities since COVID hit, so I'm sure bad actors, as they have historically, typically ramp up activity during a crisis. I know we all saw spikes in cyber and fraud in the banking sector during the Great Recession, and I would guess that COVID will be no different. To be a bit more specific, the Canadian landscape has seen COVID phishing attacks. There's been fraud, similar to what Andrew said, in a Canadian context around COVID benefit checks from the federal government. beyond Canada, we continue to hear certain nation states continue their efforts on the cyber front, shall we say. From a mitigation perspective, our organization is very focused on cyber controls. Since we assumed a work from home posture, there's been a real emphasis around employee training, communications, culture building. In fact, we continue to build out our information security management system. This is where we safeguard our sensitive data. So there's lots of work happening. We're not just maintaining, we continue to build. A couple more thoughts on mitigation. We are engaging a third-party audit firm to come review our controls and risk management around our protocols. I'm very confident that we're in the right spot. I know that this vector has been hardened by our team for some time, but it's always good to get other perspectives and to learn. So it's helpful to have an independent lens at times. And, lastly, PayCan as the operator of our national systems for clearing and settlement, we don't work in a vacuum, right? So risk mitigation and resiliency, I think, is related to the entire ecosystem. So as such, our industry has frequent cyber exercises. PayCan is a bit of a leader in that initiative. So I think all players, both banks and FMIs alike, are kind of learning together around dependencies of our ecosystem. We're learning about timely communication and around protocols for decision making. So that is all working to make us safer, and I feel good about that. Thanks, Pamela.
Thanks, Peter. Now, Andrew, you're coming from an American perspective. The banking system is very different in the United States from the Canadian experience. Can you tell us a little bit more about that and what you see? And do you believe there are any significant differences between the two nations or more similarities?
Yeah. I'd love to, and I'd try to give you my perspective as a U.S. lawyer that works both with banks and payments companies and fintechs. And when we talk about fraud, the work that I do and my colleagues do, we tend to kind of come at it from two perspectives. One is you've got the fraud that happens involving the theft of funds, and that was a lot of what Marie and Peter were talking about: identity theft, phishing, business email account fraud, things like that. But in the U.S., we also look at, in the payments industry, we also tend to look at fraud a lot that comes from the sale of products and services, because the U.S. government will tend to look at payments companies and banks and kind of ask the question, were you facilitating the sale of these fraudulent products and services? Did you have the right kind of policies in place and risk management in order to help prevent this, or were you actively helping it? In which case, the U.S. regulators may hold the bank or the payments company liable themselves for that fraud. So I'd love to talk about that. Just to step back for a minute, though, to give a little bit of color on the differences between the U.S. and Canada and maybe even the rest of the world. I think the U.S. market tends to be more fragmented and diverse in a number of ways, right? We have a lot of different types of payment products that are out there. You've got credit and debit cards, which are very popular. You've got ACH network for electronic funds transfers, also very popular especially for bill payment. And then you've got all these different, mobile wallets and retailer apps that then basically get built on top of these rails to help payments. So there's kind of diversity there. In the actual kind of retail payments market, you have diversity in the sense of you've got banks that are heavily participating in it. And then you've got the non-bank partners that work with banks, payment processors, payment facilitators, all of which help provide payment services to consumers, businesses as well. And then finally, we've got the diversity in regulation that you get from being a federal state system, where you've got banks regulated primarily federal level, but also state regulation, particularly for non-banks in terms of things like money transmission. So I think that's kind of one of the unique aspects of the U.S. market that is notable. But I'd like to talk a little bit about some of the specific fraud that we tend to see here that I think may be interesting for the audience. Certainly there's, as we've all been talking about, cybercrime, identity-based fraud are huge issues. And the U.S. government has put out a lot of alerts on that, particularly recently looking at like synthetic identity fraud, where you've got fraudsters basically kind of taking information to create what seems like a real person when in fact isn't, but being able to get access to financial services that way. from basic phishing and malware as well. And increasingly in the US, we're seeing a lot of the business fraud, and I think Marie alluded to this, where false emails and invoices are sent and people are tricked into paying them. And I think that's the type of fraud that can be made even worse during a pandemic, when you've got people working remotely, not quite as comfortable or able to talk to people as much, and maybe more vulnerable to being tricked. But I'd really like to dig in on this concept of the US law enforcement holding payments companies responsible for fraud of merchants, because I think that, in my experience, has been an area that comes as a surprise sometimes to other countries. In the US, the banks and the payment processors are really viewed as gatekeepers, and the regulators expect them to do a lot of due diligence and underwriting and risk management to make sure that the merchants that they're providing services to are not fraudsters, they're not selling deceptive products. And in the US, the Federal Trade Commission and the Department of Justice in particular are very aggressive in bringing law enforcement cases against payments companies, where the payments company can be held financially liable for all of the fraud that was committed by a bad merchant that was processing using those services. Typically there has to be some kind of active involvement or really willful blindness on the part of the bank or processor in order to be held liable. But the type of fraud that they tend to get tricked or caught up in are things like credit card laundering, where you have one merchant actually processing transactions through another merchant's account. And so you can have a fraudster kind of hiding behind a legitimate business. You have fraudsters setting up fake companies with fake owners in order to get access to financial services, and using shell companies and multiple companies to kind of avoid scrutiny. So that's a lot. And then finally, the last point I want to kind of highlight, still within this same framework of holding payments companies responsible, is that the US government has increasingly also been bringing enforcement actions against international payments companies located overseas but happen to be facilitating fraudulent transactions into the US. The Federal Trade Commission, the Department of Justice have brought a number of these enforcement actions. Could be a payment processor that's located in Europe and has all the appropriate licensing under the EU payment directives. But if they are helping merchants in the US sell products illegally or fraudulently, the US government will go after them. And that's been kind of an increasing area that we've seen that I think is of kind of particular interest from the US perspective.
Thanks so much, Andrew. That's fantastic. And thank you all. That was a really great blend of different experiences. But when I think about risk and risk culture, I think of balance between delivering what the consumer wants and then what the businesses want, but also the role that you all play in the ecosystem to protect them. As we all know, real-time payments is something that both businesses and consumers want, more, faster, better, and it will create efficiencies, but there are definitely risks. I mean, these are going to be irrevocable payments, and especially with large payments as people start to put more and more volume and value over the systems. So how do you think we balance this to ensure that we keep delivering innovative payments methods, but we maintain their security and do it in a secure fashion? Peter, we're going to start with you this time.
Sure. So a couple of things I want to touch on, risk culture and balance, right? Two things that are kind of near and dear to my heart. If I think in terms of culture, I always go back to our mandate, right? We are an FMI, we're not a financial institution, we're not a bank. So, we are all about safety and soundness of our payment systems, right? And I really see this as kind of non-negotiable table stakes, if you will. And if you were to pull out our risk appetite statement, which I'm sure my colleagues do regularly, Payments Canada, will take risks to achieve our legislative mandate and objectives, if they fit our strategy and if they're understood and managed, right? So we won't take risks that undermine the safety and reliability of our core systems. And that's a really important thing, right? So, how do we achieve that kind of alignment to our appetite? And that for me is through our frameworks and culture, right? So I talked a bit about our 3 lines of defense model, where my colleagues in the business and the first line really own and manage risk, right? Using the frameworks and tools that my team built, second line, the risk function. my team also acts really as a challenge function, right? Where we challenge the first line to make sure really all perspectives and all kind of angles are considered in an issue. So, our modernization program is currently building out a real-time payment system. And suffice to say that we have, many eyes on that work that use a risk lens. So not only do we talk about, risk at really like a project level internally, but, we do things like sharing risk logs and perspectives with our industry and oversight partners, right? So things like modernizing our systems and getting a risk management right, you could say it takes a village. If I'm to turn my attention a little bit to balance for a second, so I mentioned that I'm concerned about safety and soundness of our systems, of course, but part of the mandate of Payments Canada is to facilitate the development of new payment methods and to take into account the interest of users, right? So when I think about that, that's to me where a lot of balance comes in, as there can be sometimes competing priorities in the business of payments. So, we have a robust governance structure at PayCan where we listen to, of course, our financial institution members, but also other stakeholders, right? So there's an entire ecosystem that will be served by real-time payments. I think we can help industry strike that right balance really through our rules and through our bylaws that we draft. And that will be helped a lot, I think, by legislation that the federal government plans to pass in the coming years. There's lots of work happening on that front. I'm not a lawyer, but I sometimes play one at work. But maybe, Pamela, this is a good time to segue to Andrew for a bit of a legal perspective.
Well, thank you, Peter. Absolutely. Andrew, what do you think about what's happening in the evolution in the payments field?
Yeah. Well, I think, faster payments is an interesting issue from the U.S. perspective in particular, because I was talking previously about how, the U.S. has a little bit of a diverse and fragmented payments industry, and that certainly applies to faster payments as well. And even in that case, the U.S. is really playing catch up to a number of other countries in some respects. So in the U.S., faster payments there's a couple of different entities that are either currently doing it or are also working to build faster payment rails. The systems that are in place already, you've got the Clearinghouse Real-Time Payments Network, which is a real-time network set up that has quite a few banks across the country participating in it. You've got Zelle, which is a product offered, a number of banks use it for kind of interbank instant settlement that consumers can use to make payments to each other, et cetera. And then you've got the card networks that also have basically come out with kind of push to card technology that allows for near instantaneous push of funds to a cardholder account, essentially. So those are some of the existing faster payments that we have in the U.S. right now, but also there's a big one that's being developed that continues to be worked on, and that's the Federal Reserve in the U.S. has actually come out with its FedNow proposal, which would be a instantaneous settlement program through member banks at the Federal Reserve. And I think that maybe looking at that program, we can start to dig into a little bit about how do you manage the risk with faster payments, right? I think you commonly hear the statement, faster payments, faster fraud, right? So how do you manage that? And I think if you look at some of the faster payment systems that have been set up in different countries, there are a couple of lessons that seem to be pretty popular. One is that you can maybe roll out some of the features and functionalities on an iterative basis, right? Starting with maybe lower dollar amounts that you allow to be sent, limiting it only to credit transactions, initially, so that you're pushing and not maybe limiting the fraud that can come from allowing debit. And as you're working on extending all this out, refining the technology and the experience you have to be able to manage that. So I think that's that's kind of what's happening here in the U.S. and how you manage that. In the U.S. at least, I think it's also interesting to think about what are the core use cases right now that are being used for faster payments or that are likely to drive it. And I think commercial payments are a big driver of that, and kind of invoice management and bill payment that goes along with that, and being able to do that quickly and efficiently. We're seeing, especially in the push to card area, we're seeing a lot of insurance payments use cases, being able to get funds to somebody that needs their insurance payments, you can just send the funds instantly to their card and they have access to it almost instantly. Same concept with gig workers. If you're talking about drivers, Lyft and Uber drivers, et cetera, being able to get their funds instantly right to their card account. So those are some of the big use cases. I think we're seeing less in the US, at least in the short term, of kind of the retail consumer impact of this, because we're still very prevalent, high use of credit card and debit cards. But that's kind of the US perspective.
Well, thanks, Andrew. It's a bit of a different, but there are a lot of similarities, of course, as well. And Marie, from your perspective at a large FI in Canada, what's your thoughts on this?
So I think, real-time payments or any other, opening or new opportunity, really, it brings healthy competition in the payment space. And at the end of the day, it really serves all of us to develop better payment products, services, moving forwards, convenience forward, and all of that. Because let's not forget, we're talking about the dark side of payments, but complacency could also be a big risk for many that all of us need to keep in mind. So definitely we welcome this opportunity. But as Peter and Andrew alluded to, the opportunity of building a brand new real-time payment system for Canada has its risk reward, right? So to better frame the risk and really manage it, and I do want to echo something that Peter said, this is, well, I know I use the word risk a lot, and that's part of, it's in my title, so it has to go with. But other than that, it's not, I do want to make sure that people understand that I view risk as a very efficient management tool, and it's not being risk avoidance. And all the comments and the positioning that I do right now is with that same mindset. So when we say what are key factors to really ensure a secure ecosystem, right? First and foremost, in our opinion, it's a robust legislative framework that all participants have to follow with effective prudential regulatory oversight practices. And part of that is that it kind of levels the playing field, make sure everybody has, minimum common requirements to meet to ensure the safety and soundness of the payment system, and even the protection of the end consumers. We haven't talked about that, but kind of it sets the rules. You have to play by those rules. The reality is that in a payment ecosystem, you're only as good as your weakest link from an ecosystem and a systemic risk perspective. So setting the bar, making sure everybody plays at that same level, you're eliminating some of that. Then you need to look at what are the measures? Like, what does that mean, right? There is obviously the financial risk, moving the money, ensuring it settles and all of that. So all that stuff is taken care of, and people say, hey, the money is in the account, it's pre-funded, there's no risk to you. There's still a lot of underlying risk that we need to think about. You need to think about the market conduct risk. How are we going to disclose the information to the clients, dispute resolution procedures, liability rules? One live example I can think about is I saw this morning, Citibank is basically suing one of the Revlon's creditors because they had fat fingers. They had an operational event, and instead of sending a wire, which is fundamentally real-time final, just like the real-time payments we're talking about, instead of sending $1.5 million, they ended up sending $176 million. And so, so now they are facing in court because they went through the regular procedures, as it was an error, send the money back, what I understand from it. And the beneficiary said, I'm not sending the money back. And so now they have to go to court and go through all of these. So these are things, no matter what you do, they happen, right? And then you have to think about just the fundamental operational risks as well. So think about we talked about policies, controls, operational cybersecurity, all these things. I'm not going to go to that again, but I do want to call out specifically, maybe, the need to comply from an AML perspective. we all in this fight together. We talk about fraud, but fraud is one component of fighting financial crime, and that has sometimes some real human, impact. Think about in Australia back in November, where Westpac, right, was facilitating and inadvertently to some payments that was supporting child pornography or human trafficking, or anyway, really not good things. And they ended up being breached. They had to set aside some money. They had to do full investigation. It ended up being an error in technology, a mixture of technology errors and human errors. Nobody does this willfully. They were basically found that they had breached their reporting obligations on over 23 million transactions. So it has real impact in the human piece. And now obviously they did the right thing, they're fixing it. But leveling that playing field is key, because you cannot have one player that would not be subject to that same rules, and you end up inadvertently facilitating. The last piece I want to bring is adequate risk management framework and control processes, ongoing in all these aspects. And that's, again, kind of sounds really good, but think about, what I said: identify, assess, mitigate, monitor, and report. I'm going to use the a live example again from a Wirecard scandal. So Wirecard was a tech German startup payment processor, which qualified, first to the regs in Europe, right, to be a payments processor and build their business accordingly. Not sure exactly what happened, but because the investigations are still ongoing, but fundamentally, one day there were accounting irregularities. Sorry, it's a word I can't say. And almost $2 billion went missing. $2 billion euros, 1.9 billion euros. They had to file for bankruptcy. Their CEO was placed under arrest. Their COO is currently on Interpol's most wanted list, right, and strongest. But more importantly, the ripple effect all through all that uncertainty, what was happening is that it created a risk of crisis of confidence in the sector, right? And the potential of failure of some other firms that were using their services, and had repercussions that were felt worldwide. So whether it's them specifically or others, the need to ensure that ongoing oversight and make sure that everybody plays well and keep playing well. The controls are not perfect, we know that. There are flaws, and that's why you need to monitor and identify gaps and fix them. Hopefully you can find them earlier, but these things really do happen. They just do happen, and that's why we are strong advocates of making sure this ecosystem is as a robust framework to hopefully oversee and minimize those risks.
Thanks very much, Marie. So we're moving rapidly through this hour. We've got one question left before we get to your audience questions. So please start to fill that Q&A box up. I wanted to poke at our panel just a little bit to be a little provocative. So how do you feel about risk and risk culture? And do you see that it has moved from a position of culture to a real focus on compliance? Somebody said compliance earlier, and there is so much oversight, particularly of financial institutions and FMIs and so forth. And so do you see that we are shifting more from a position of risk culture and taking risks to foster business to more of a compliance or tick the box, dare I say? Andrew, we'll start with you this time, please.
Yeah. So I guess I would maybe rephrase it a little bit. I think that, risk and compliance management is really about having a culture of compliance, right? And I think that Marie said it very well. There is risk that you can take from a business perspective that is not necessarily a bad thing. The question is, do you do it thoughtfully and carefully? And do you have the right compliance management infrastructure in place and the right culture so that you're able to do it, thinking through the risks, taking the right actions to have, and doing it in kind of a thoughtful way. So I would maybe reframe it a little bit that way, because, here in the US at least, the federal regulators have really pushed having a culture of compliance as a key part of the anti-money laundering regulations that Marie was mentioning, but also just as good general corporate practice across other kind of fraud and risk mitigation areas. So that's really a big part of it. I think that, you know, where do you see risk management or the kind of the culture collapse and fall down, and thereby you can find weaknesses that can lead to fraud and other problems? Well, I think at least in the US, if you look at a lot of the enforcement actions that come out from the anti-money laundering regulators or from the Department of Justice and Federal Trade Commission, there's a couple of areas that kind of get repeated over and over again. One is having insufficient staff in terms of the number of staff and the training that they have. That's always a key aspect of it. And that can lead in many cases to the types of failures that Marie, I think, was mentioning with respect to the Australian entity, where you know, you're monitoring transactions, but you don't even have enough staff to be able to review them and report on them appropriately. And so the backlog grows and grows and grows. That's a constant battle that gets called out. I think the use of outdated technology, while at least in the US, the regulators are very careful not to say that you have to have a particular type of technology in place for monitoring for fraud or suspicious transactions. You will see hints of it in some enforcement actions. And even just recently, there was a coordinated US enforcement action against a broker-dealer, so not a payments company, but also a regulated entity from an AML perspective, where part of the allegations involved the broker-dealer kind of monitoring suspicious transactions using spreadsheets, right? Like Excel spreadsheets, which, given the volume and the sophistication of the transactions, was never going to be an effective way of actually tracking and being able to assess what was going on. So I think, you know, technology is a big part of it, and there certainly have been a lot of developments when it comes to artificial intelligence and machine learning and being able to have that in place. Another area where you tend to see breakdown is where you have businesses putting their business considerations ahead of compliance. And that's always a tug of war and a balance that needs to be struck, but having the right culture of compliance, so ensures that if you do see fraud happening, that you're not going to turn a blind eye to it and that you're not going to allow it to continue. And I think you see a lot of enforcement actions here where a payments company or a bank knew that they had a customer engaging in fraud, but it was a profitable relationship, and so they didn't do anything about it. And that is always, you know, red flag number one in a lot of these enforcement actions. And then I think a final aspect of having a good compliance culture is really having that buy-in and support of senior management. You can have the best compliance staff in the industry, but if management isn't supporting them and providing them with all the resources that I mentioned, they're not going to be able to do their job, and they're not going to be able to do it well. So that's kind of a big part of having the right culture in place as well. And I think that at the end of the day, if you look at the most successful businesses, I do think that they find a way to balance the business that they're looking to do with having that culture of compliance so that they're able to achieve their goals while managing the risk that comes along with that.
Okay, thanks, Peter. Quickly, Marie, over to you. Some thoughts on this conversation. I know you have some pretty strong feelings.
Well, I do. Like you've heard from my background, coming from a compliance is something you have to do as a financial institution. Risk management is something you want to do. And I think the secret sauce comes when you can marry both. And I may give a parallel into the privacy world, where there's a concept called privacy by design. What really it means is that, to what Andrew was meaning, is when you integrate really privacy as part of your business requirement, as part of a project, you get to comply while delivering, right, an enhanced value proposition for your clients, and enhanced product, enhanced features. So my view is that, you know, it's risk is not static, but if you can integrate risk management compliance requirements as you build it forward, they don't come attached after and become an anchor and kind of not necessarily deliver, you know, the outcome is not as desirable. But if you embed it in together, they become a stronger output for the clients. And so to your point, you don't ever have to compromise a risk culture just to focus on compliance. It becomes part of it, and you do you hopefully don't end up being willfully blindfold to some situations. You have the right controls and features to ensure you comply while delivering value to your clients.
Fantastic. And Peter, just a couple of points from you.
Yeah, so I mean, I agree with so much of what Andrew and Maria said. Pamela, as you know, as an FMI, we mentioned earlier, the entire industry and really the entire economy relies on us for clearing and settlement. So, I mean, we see compliance as bare minimum, right? Compliance is important, and we're happy to work with our partners in oversight on compliance, but it doesn't drive our enterprise risk management program, right? We build frameworks and tools that empower the business to manage risk, to think about risk, to understand risk, to take risk and be accountable for it, right? And it's important to note that, risk management, we're not here to say no. At least my team isn't. And we're not here to avoid risk either, right? We're here to help make risk-informed decisions. And I think the big piece to make all that work, and it's harder than it sounds, is about that risk culture, right? And that culture where we consider things like key risks and emerging risk and governance and risk appetite, that's all evolving and that's okay. But frameworks, unlike frameworks and tools, culture takes time, right? It takes leadership, like Andrew mentioned. It takes doing the little things well. You have to be consistent. You have to be present. And as I tell my team, you have to perform with courage and be independent, right? So we're talking training and communications and building relationships, and maybe most importantly, trust, right? If you get that right, you'll get the risk cultural thing right. Maybe if I can offer one thing in closing, a bit of a cultural thought, just for Canadians, I do think sometimes we can be conservative or risk adverse as a people. And I think in a global world, Canadians have to sometimes guard against that. And I would offer some hope that I think having a robust risk culture where you know your risks you can take and the ones you have to manage might help us get through that. So maybe back to you, Pamela.
Thanks, Peter. So now to the fun part, which our panel doesn't know about, is our great audience questions, and I see them coming in, which is fantastic. So the first one, I think I'm going to pose to Marie first off, is with the major banks in cooperation in a payment platform like Interac, when do you see competition entering the Canadian market with payment platforms specifically like WeChat and Alipay? Marie?
Well, I mean, so how do I tackle this one specifically? Where do I start? Interac itself has served great purposes in creating innovative way. And in fact, we sometimes Canada thinks we're behind in real-time payments because we're just building it. However, we've had Interac transfer for a long time, and it is near real-time transfer and largely used in the retail space. So from that perspective, I think there's already some great competition that's happening there. The WeChat, the WePay, and all these aspects, they bring different components to the piece. We've said before, we welcome competition. There's already some wallet components that are available out there. I'm not as familiar specifically with these two, so I'm not going to speak to them necessarily, precisely. But when do I see that coming? From my perspective, I believe that once the regulatory framework is in place, it will describe who and what and how we want to have newcomers play in Canada in our payment system. And I'm sure that they consider these new players like WeChat and WePay and others to come and join our family and join the party, as they say.
Thanks, Marie. Andrew, just a quick contrast. What's been the experience in the United States? Just a couple of quick points in terms of competition and internationals entering the scene.
Yeah, I think particularly if you talk about some of the Chinese companies and the payment systems that they have, it's really interesting when it comes to entering the U.S. because fundamentally there are differences in how kind of retail payments work between the two countries. In the U.S., credit cards and ACH are kind of the two primary rails, and the products have been built on top of those, particularly credit cards. Whereas in China, they kind of jumped over some of those steps and have gone directly to kind of the mobile wallets and having more of it flow through that. So As they come into the US, there has to be kind of a coordination with the existing rails that are in the US, as well as the regulatory framework that comes along with that. As I mentioned earlier, you've got the federal and the state regulations and things like state money transmission laws, which can require licensing on a state-by-state basis. So it can be pretty complicated, not just for a Chinese company, but really for any international payments company to come to the US, where sometimes the legal framework is a lot more complicated than what they're used to in their home country. I think the other issue to think about from the US perspective is that there's always national security type concerns that come into play. And obviously right now, the United States and China, there are some tension there, and the US government has taken kind of specific targeted action against certain Chinese technology companies. So I think that's another kind of important factor that comes into play in terms of an international company, particularly coming maybe from China into the US, and some of the issues that they have to deal with.
Yeah, thanks, Andrew. Let's stick with you for a second for our second question, and we're going to get to more quick snappers because we're running out of time, and I want to get to all the questions that we can. So what's being done to validate? So we were talking about some of those, or you were talking about some of those international tensions and issues. So how in web banking are we able to validate and authenticate that the bank is dealing with its customer in confidence, and then on the flip side, ensure confidential information and data are fully secured? I mean, that's certainly a part of the landscape. So just two quick comments from you.
Sure. It's a complicated question, but quickly. So I do think that in the US, there's a lot of focus now on identity authentication, right? Understanding, is this person that I think I'm dealing with actually that person? And whether it's, biometrics or using various data points to identify that is a big focus right now. Even stepping back a little more broadly, there's been a big push in the US as internationally on beneficial ownership and making sure you understand who the actual owners of the companies are. So those are two, I think, important issues that are being looked at in the US.
Great. And back to you, Marie, from your perspective at the bank in Canada, what would you say two quick things about the Canadian situation?
Well, in Canada, I think we, from an authentication perspective and identification, our online systems typically are strongly founded on that. In fact, I believe, many aspects leverage that, whether it's, we just mentioned the Interact source, they guide it back to our systems for authentications, right? And validation of moving that money. So I think we're in a good place for that. It gets more complex globally, and there's obviously much more to consider. On the data piece, we're all subject to our local privacy jurisdictions, as Andrew mentioned as well. So we need to be mindful of that, where we store the information. We need to comply with all these pieces. And there's in Canada, there's the additional complexity of federal and provincial jurisdictions, which I'm going to try to stay away from today if you want quick sound bites. So there are ongoing challenges to that. Unless you have a universal way of identifying people. Some countries have digital ID systems. Canada's not there yet, and it's something that is useful, but it has its own value, risk, reward to consider.
Yeah, thanks, Marie. And I think that would be actually a great future topic for us on digital ID. Peter, the third question, it looks like I think we'll go to you next. So to mitigate payment fraud, should we be reducing outgoing payment types such as physical checks? I know there's been a lot of talk about that, certainly during the pandemic, and increasing our use of EFT, reloadable benefit payment cards, and Interact e-transfers. Some of those topics we've touched on a little bit, but Peter, from your perspective, what about payment fraud? Should we be reducing or changing our types of payment?
Yeah, so if, you're talking to the risk guy at Payments Canada. So of course, if we can, we have to be playing the long game here, and we're building new systems. And do we want to be building new systems that support obsolete technology, or do we want to be more in the future? I remember talking to a fellow banker who came from Mexico. He was talking to me, he was shocked he had to use checks for rent here in Toronto. Like, who uses checks? What's a check, right? So, much of the world has moved beyond that. There's initiatives today happening with Payments Canada and others to reduce checks. And I think that's a positive thing. But, as a consumer, not as a PayCan risk manager, there are people that still rely on that. So we have to be respectful that, people do like various modes of payments. So, there's a balance to be had there, as in all things.
Thanks, Peter. And so one more quick snapper, one comment from each of you. It doesn't have to be yes, no, but just a couple sentences. So is technology increasing payment fraud or helping prevent or detect payment fraud? Marie, your last word on that?
It's shifting and it's expanding to different generations, but it's just an addition opportunity versus, it doesn't eliminate anything. And hopefully we're getting better at over the controls to mitigate it.
Peter?
I think Andrew mentioned AI a few minutes ago. I'm a big believer and hopeful in that new paradigm. I think that can help reduce eventually, maybe not tomorrow, but eventually help reduce some of this. So a longer term, yes.
Okay, and Andrew, last word from you.
Yeah, I think that it's a constant cat and mouse game, and I think technology can definitely impact both sides. But I think at the end of the day, that we're seeing a lot of resources being put into areas that I think that will have a lot of impact. The AI, like Peter just mentioned, I think at least in the U.S., improved identity authentication is going to make a big difference as well. So I'm hopeful that at the end of the day, technology is going to help the good guys more than the bad guys.
Fantastic. Thank you all for being such great panelists and for your great questions from the audience. We hope you found this session really engaging, and thank you to everyone who participated. We are trying to be on time and respectful of your time. I see it's now 11:01. We will send everyone who registered a link to the recording of the session later this week. Please feel free to share it with your colleagues and friends. Our next topic is managing through change, and there's certainly a lot of that going around, and we'll be doing that on September the 22nd. This will be a virtual roundtable for a bit of a change up in format, where we're going to discuss the challenges of attracting talent. We all talk about the war on talent, how borders are now borderless, and the opportunities for our industry to develop experts unique to payments. I hope you can join us, and you can register as always on our website at thesummit.ca. Thank you again, everyone, for your time and your interest. And until next time, stay safe and healthy. Thanks very much. Have a great day.
Thank you.